small caps. Hi, everyone. I'm Marc Lichtenfeld, Chief Income Strategist with the Oxford Club. When it comes to small cap stocks, investors usually have very strong opinions or intense emotional responses. Very few people are like,
I do not know, and I do not care.
You see, smaller stocks can deliver very large gains.
That's good.
But many investors have also been burned by small caps that were supposed to be the next big thing and instead were the next big bust.
Ooh, that's bad.
But adding small caps to your portfolio is critical for your investment success.
Can I go now?
Nobel Prize winners Eugene Fama and Kenneth French studied small cap returns from 1926 to 2018. They found that over those 92 years, small caps outperformed large caps significantly. While large caps generated 9.8% annual returns, small caps returned 11.7% annually. That may not sound like much of a difference, but $10,000 invested for 10 years, growing at 9.8%, comes out to $25,470. If you'd earned 11.7% instead, you'd wind up with $30,236, or nearly $5,000 more, 19% more money. So not only do small caps belong in your long-term portfolio, but adding them now should really grow your portfolio more than at any other time.
Now, say it. Do it now. Do it now.
According to T. Rowe Price, small caps tend to outperform their larger counterparts during periods of heightened inflation and rising interest rates. And following periods of economic recession, U.S. small cap companies have generally led the market recovery, often going on to outperform larger companies over multiple years. So remember, stocks are leading indicators. They don't go down because there's a recession. They go down because a recession is likely to happen. When stocks go up, it's because the economy is expected to be stronger 6 to 12 months from now.
Stop following me! Stop following me in front!
So even if you believe we are headed into recession, stocks should move higher in the very near future. Even the bear market of the Great Recession lasted only 17 months, and stocks bottomed in March of 2009. The economy was not on solid footing yet. We were still in the thick of it, but stocks signaled the end of the recession like they usually do.
Hey, I've seen this one. This is a classic.
What do you mean you've seen this? It's brand new.
So stocks should be going up again soon, and small caps will most likely lead the way.
Follow me!
Small caps are also cheap now as they sell off harder than larger stocks in bear markets, and we're just coming out of a bear market from 2022. Today, the Russell 2000 index, the most well-known small cap index, trades at half the PE ratio it did 1 year ago. Furthermore, the Russell 2000 is at its lowest valuation compared to the large cap Russell 1000 in 20 years. Lastly, when you hear about a stock soaring hundreds of percent in a short period of time, it's usually a small cap.
Now that I'm a rich father, you will try to impress me and I will remain distant.
Year to date, which is just 6 weeks, small cap Syncor Pharma is up 145% after it agreed to be acquired by AstraZeneca. Carvana, which was beaten up badly in 2022, is up 126% since the end of last year. And Silex Holding Company closed 2022 at $3.99. As I record this, it's trading at $9.61, a 141% gain. Not too bad for a month and a half. So I hope you understand how important it is to include small caps in your long-term portfolio. And if you're a more active trader, small caps is where a lot of the action is. Triple-digit gains in a matter of weeks or months happen in small cap land, almost never where mid caps and large caps dwell. Those kinds of gains can really move the needle on your wealth. That's it for today. I'm Marc Lichtenfeld. Thanks for watching State of the Market. I'll see you next time.